Hi everyone, welcome to today's video. So in GDP terms, India has become the fifth biggest economy in the world. Now many business people, politicians are predicting that we will become a $5 trillion economy soon, and within a few decades we will become a $40 trillion economy. Goldman Sachs has recently released a report which went on to say that by 2075, India will become the second biggest economy in the world. Now the thing is that when we start hearing these numbers, we automatically assume that India has already become a very rich country or will become a very rich country very soon in the future. So is that really true? Well, one counter argument here is a data point called as GDP per capita. So according to GDP per capita, the data shows us that India is ranked 139 out of 192 countries. This is behind countries like Sri Lanka, Iran, Bhutan. So in real terms, are we rich? Are we not rich? That is the precise piece of conversation that we are going to have on this first episode of our podcast called as Mango People's Economist. Why we are naming it as Mango People's Economist? Because we want to simplify the entire economic landscape for you. We will view topics from an economic lens, explain it to you in very simple, easy to understand language. If you are a school going student, if you are a college going student, if you are someone who has an interest in finance economics, then Ayushi, who is a formal economist, she will explain things from economic side. I'll explain things from finance side. And we will present a collective viewpoint by data-driven approach. So I hope that you will support our initiative here. Also, a very big shout out to our sponsors for today, which is TaxBuddy.com. TaxBuddy.com is an excellent tax filing platform, and they are running a tax filing Mahostav. Under this, there is 40% savings to be had. How it will come exactly? One, you will get a 20% flat off on your ITR filing, and another 20% would be given as cashback. There are no terms and conditions and no hidden charges. TaxBuddy is known for its unbeatable services, and now they have the most unbelievable prices. So do check out the links in the description and comment box and file your taxes as early as possible. So with that said, let's move on to the main video. And I will let Ayushi set the agenda first, and then we will delve deeper into the topic.
So really excited to start this podcast. Now, today's agenda is primarily we'll be discussing three things. First is whether India is rich or poor. Second, if India is not already rich, then how can India reach the stage where it can call itself rich? And finally, we'll be discussing what is the economic model that India should be adopting to reach that stage. So let's start with the first point, whether India is rich or not. What do you think, Akshat?
So I'm not sure whether India is rich or poor. I don't think there is a standard definition of rich and poor. But whatever conversation we are going to have it from an economics viewpoint, because richness can be defined in terms of like time, health, wealth, वगैरह चीजें. So we are not getting into that. We are going to have a purely economics oriented conversation. So over to Ayushi, if she can take us through key points that economists look in order to ascertain whether a country is rich or poor. So what are those data points, Ayushi?
Absolutely correct. There is no standard definition of a country being rich or poor. However, we do have commonly accepted definitions for a country being developed or developing. Now, economists usually use certain indicators to define a country as developed or developing. These are what we are going to discuss in today's conversation. The first is called as GDP or Gross Domestic Product. Now, GDP is basically the total value of all the goods and services that are produced in a country in a given year. This basically signifies the production that is happening in the country. And seeing the trend of GDP over the years, we can see how is the economy progressing.
So just a very quick counter question there, that if the GDP of a country is large enough and it's growing, it's thriving, does it mean that the general population there is rich? And is that like a right thing to equate, that generally population can be considered rich because the GDP is fairly high for a country?
So this is exactly where we'll discuss the second indicator that economists usually use to assess the well-being of a nation. This is called as GDP per capita. Mathematically, it is defined as the total GDP of the country divided by the total population. And it signifies the average income that is held by a common citizen or a common person in that country. So this is called GDP per capita. Now, for a country to be called as developed, GDP per capita is usually in the range of $12,000 to $15,000. So if you look at India's data, India's GDP per capita comes to be around rupees 1,72,000, which is equivalent to around $2,100 to $2,200. So India is not a developed country so far. Even if we look at GDP per capita in PPP terms, purchasing power parity terms, then also we are not in that developed category range right now. Now, there is a third indicator to differentiate between developed countries and developing countries that economists usually look at. This is called as Human Development Index. Now, HDI includes three factors. It looks at the literacy rate, it looks at the access to education and access to healthcare. So, in terms of HDI, India ranks at 132 out of 192 countries. Its HDI is around 0.63. Usually for developed countries, it would be greater than 0.8. So again, India is still a developing country and cannot really call itself developed at this stage.
Right. So just to add to that, and these are like core economic indicators that Ayushi spoke about, there is another very interesting data point or data set that I would like to call. This was recently released by World Economic Forum, and this report is titled as Competitive Advantage of Nations. Now there, a very interesting theory was proposed that you can segregate countries as per three specific viewpoints. So one would be called as resource-oriented economies. For example, in India, almost 40 to 50% of our entire population depends on agriculture. Now, what exactly is agriculture? Well, agriculture dependence essentially means that you are, in a way, using raw commodities and commoditizing things. So that is what our predominant dependence of our population is. So these are resource-based economies. Now, another example could here be like Middle Eastern countries, which depend on oil or which used to depend on oil. These would be countries like Venezuela, which are extremely rich in terms of gold deposits, extremely rich in terms of oil deposits. So these would be resource-oriented countries. The second type of countries would be efficiency-based economies. For example, there are certain economies, if we consider the case study of Singapore, for example, at one point in time, it was a very efficient manufacturer. In fact, still it has a very high or one of the highest trade to GDP ratio. So what they were essentially doing is that they were picking raw material and adding a lot of value to it and then exporting it. So these type of efficiency based economies, what they typically do is that they add a lot of value. If you compare this example to India, then one could argue that, for example, Apple Computers is setting up a lot of factories, so opening up a lot of stores in India. So what are they trying to do? So they are trying to actually sell to India, right? India is not exporting like Apple products per se. So is India really an efficiency based economy? The short answer would be a no. Another example of efficiency based economy would be something like China, and all of us understand that China actually picks up like low end material or low end production. They kind of make it assembly line and then they are able to export to the world. So that is efficiency based because they are probably increasing the labor productivity there. So that is the second type of economy that exists. And third is an innovation based economy. So here there will be examples like Israel, or there would be examples like the US. So these countries typically export a lot of things around the service sector, around healthcare, around education, around technology. So these become the building blocks, or innovation becomes the building block of this third type of economy. The goal of any economy should be to eventually become innovation based economy, because that is where the major money is made. So why is that? So for that, let us quickly go to Ayushi, and if you can quickly take us through why innovation is such a big factor.
If you look at history, then innovation tells us that countries who could innovate well, they could actually make a lot of economic progress. For example, the Dutch Empire innovated and manufactured ships, and that is why they could actually find new trade routes. So then came Industrial Revolution, where so many technological innovations happened, and the British Empire and these countries could flourish a lot because of this Industrial Revolution.
So even if we study the contemporary world right now, we could argue that US is the strongest economy in the world, and the innovation, according to me, from the US is primarily the creation of fake money, that US is able to successfully export inflation to the world, and they are able to take like infinite amount of debt. That is causing a lot of financial terrorism. I had done a video here in case you want complete understanding of it. You can go and check it here. But yes, if we study any empires, be it the Dutch Empire, be it the British Empire, be it the US Empire, there is some kind of innovation that has propelled these economies and had really catapulted them to the top.
Another example that we can pick from our own history is when India used to control 33% of its GDP. It flourished in trade, commerce, logistics, and India was at its peak.
Even during that time, we were a net exporter of the finished goods. We were exporting a lot. So we could argue that we were an efficiency-based economy, as we were categorizing it as per the World Economic Forum data.
Yeah, but this reversed when Industrial Revolution happened. Exactly. And after Britishers annexed India. So what they did was they took away raw material, they produced and manufactured in their country and then exported it to us for us to consume it. So that reversed. And now where we stand, India's contribution to the world trade is only around 2%.
So that is a deeply worrying factor. But the most important point that we would want you to take out of this conversation is that number one, the world changes, the rankings or the true richness of the countries changes. The countries that stay on top constantly innovate. There have been phases, for example, close to 1700 years, India was the apex country in the world in terms of wealth that it generated for its citizens. Why? Because of innovation. Similarly, right now, what has been the biggest innovation in terms of money? It is the creation of fake money or debt, which US empire somewhat controls. So there is a fascinating book by Mr. Ray Dalio. You can go and read it. He hasn't discussed these concepts precisely, but he has talked about the rise and fall of empires. So that will give you better context. But I hope that through this brief conversation so far, you are able to grasp the point that what makes a country rich and what are the typical indicators that we can pick in order to ascertain whether a country is rich or not rich. So now let us move to part 2 of our conversation, where we will discuss as to how exactly is it that we can make India richer. So for this, it is very important to take a stock or concern of the current situation. And number one, we need to understand the makeup of our current GDP. Where is it that India is making its money from, so to say? That's one. And second is that what are the areas that India would need to focus in order to become rich by understanding case studies from across the world. So over to Ayushi, if she can help us understand better as to where India currently stands in terms of its GDP numbers.
So to understand where India currently stands, we basically have to understand what are the components which contribute to the GDP of the country. There are primarily 3 sectors. First is agriculture sector, second is manufacturing, and third is services sector. If you look at the time of independence, then the contribution of agriculture sector to India's GDP was around 50%. This has come down to around 16% now. And the major contribution is done by the services sector, which contributes around 50% of India's GDP. Now let's look at developed countries and see what is the breakup of their GDP. So if you look at Singapore, services contribute around 70% of the GDP. If we look at US, then services sector contribute around 75% of the GDP. So this is what is lacking in...
And just Ayushi and I were discussing also, you were talking about Australia. So we thought that Australia is an agricultural oriented nation.
It used to be, yes.
Surprisingly, even their GDP comes mostly from services sector. So it was very surprising for me. So I interjected to explain that fact. So what do Ayushi? Yeah.
Now within the services sector also, there are different segments which actually value add to the sector. So the key takeaway is that India needs to focus on the services sector. Now let us try and understand within the services sector which are the segments that we need to focus on. So within the services sector also, trade, real estate, construction, finance, these are the various segments within the service sector. So if we look at Singapore, Singapore is one of the financial hubs of the world. But if you look at the contribution of financial sector within the services sector, in India, it is only around 6 to 7%. And the major contribution comes from real estate and construction. So the right segments that India needs to focus on to reach that developed stage has to come from services sector. But within services sector, it needs to focus on segments like finance, technology, R&D, and focus on innovation generally.
Right. So I'll just add a few more practical points around it. So basically, if we consider something like New York, right? So all of us know that New York, the per capita income in New York would be very, very high, right? I mean, it would be richer than the entire United States per se. Similarly, if we pick other financial centers, for example, Hong Kong or Singapore, why is the per capita income so high? The reason is that they are mostly working in a high niche or a high money niche, which is finance. Now, why is finance or technology such a powerful engine for economic growth? The reason is fairly simple, because finance and technology creates a massive leverage. For example, Microsoft is selling products all across the globe. Now, in order to create a software from Microsoft, they will have to do a lot of R&D, but they can duplicate the product and sell it. So their marginal cost of selling is very low. Same applies to finance, that with a small investment banking team of 10-15 people, you can manage an asset which is worth like $1 billion. But consulting way, you cannot do it. So to cut the long story short, what ends up happening is that right now in the world, finance and technology are 2 pillars or 2 engines, you can say. So just by using very small teams, you are able to add a lot of output to the entire GDP. So this is the reason why right now finance and technology are 2 very important engines, and countries that are focusing on this are generating massive returns. Now this might not be true few years down the line, I don't know, but as of now this is the situation practically speaking. So okay, so one sector that we missed speaking about is the manufacturing sector. So India leapfrogged from agriculture to services. We skipped manufacturing. So number one, if you can throw some light on that particular aspect, why did that happen in India? And do we actually need to take care of our manufacturing sector and any sub-segments within manufacturing that we need to be deeply concerned about?
Absolutely. So what usually happens in the growth trajectory of a country is that they start off with the major contribution coming from agriculture sector, then the manufacturing sector, and then moving on to services sector being the dominant sector. However, what happened in India was that we shifted from being an agriculture-based economy to a services-dominated economy. How did that happen? So what happened was that when India got liberalized in 1991 and a lot of international multinational companies started coming to India, most of the back-end offices came to India. BPOs were set up and IT units and the back offices were set up in India. This meant that the services sector started expanding. However, we missed out on developing our manufacturing industry. Having said that, if India starts focusing on its manufacturing industry, I think it can really help in boosting the employment and the GDP of the country. For example, automobile sector is one sector where we can really do well. It is one of the major contributors to the manufacturing sector, and producing high-end cars and exporting them can really help the nation. Similarly, textile industry, which used to be very dominant in India when the cotton mills, etc. were established in India, have started facing a lot of competition from countries like Bangladesh and Vietnam. And these are the industries that we need to push so that they can actually contribute to the overall manufacturing sector.
Right. So a couple of interesting questions come to my mind. One is that when it comes to low-end manufacturing, for example, you spoke about textile manufacturing. Do we really need to go there and start competing with countries like Vietnam or Bangladesh? Do we need to do it? Why can't we just simply focus on high-end manufacturing, if at all? Second is that why not skip manufacturing altogether? We were looking at the data earlier on that US contribution of service sector is around 75%, in Singapore at 70%. So why is it that we need to bother about manufacturing? Why can't we directly jump to service sector?
So to answer your first question, why we need to focus on low-end sectors, while I would say that nothing is low-end, you still buy products from China, right? And they produce in bulk, they export to the whole world. So they prospered because of it. This cannot be denied, right? So India has a competitive advantage in textile sector because of the kind of crops like cotton, jute that is grown here. So this is something that can be used to increase our exports.
So if we look at the concept of gross value add, so gross value add means that, for example, if cotton is produced in India, now you take this cotton and you just sell it to Sri Lanka or Bangladesh. We are not adding that GVA or gross value add on that cotton. But if we manufacture a shirt out of it and then sell it, now the GVA is higher.
Yeah, so and that will reflect in the GDP of the country as well.
Exactly. So the way I think about this low-end versus high-end manufacturing is that probably it might not be a bad idea to not focus too much on low-end manufacturing. A better idea would be to focus on high-end manufacturing, bring on that high-end technology, because what that allows us to do is that improve this GVA. So that is the eventual goal. Now, if the argument is that, pehle we'll have to start with low-end manufacturing so that we can prove to the world that we are
low-end manufacturing means setting up small units within the household, right? Now, if you establish big factories and you establish big commercial houses which are exporting these kind of products to developed countries, then it can actually contribute immensely to the GVA.
No, I completely agree, but my viewpoint on this is that you actually need to pick a goal, right? I mean, you need to be focused. So of course, we should focus everywhere. But the idea is that if we have to focus on 3-4 really critical things, then at least the perception that I get by reading things around me is that India is focused everywhere, right? Yeah, Make in India, we will do, right? We will do like a lot of low-end manufacturing also. High-end, we are trying. We are, doing a bunch of other different things also. It sounds great in theory, but it just distracts the focus.
It also depends on what exact things are you targeting. For example, low-end manufacturing usually involves a lot of labor. Yeah. So if you want to provide employment to the people of the country, then you need to have some amount of those low-end manufacturing jobs as well. Right. However, high-end manufacturing, again, if you shift to factories, you have big machines which are working for you, then probably the number of people who are employed there would reduce. That would mean that you will not be able to gainfully employ the youth of the nation, right?
But I also think that it is about understanding your own competitive advantage. A great case study would be that of Singapore, which we will speak about in a minute. But in Singapore's case, what they ended up doing is, because so much trade flows through Singapore, its geographical location, which is the Strait of Malacca, a lot of world trade flows through that strait. So Singapore picked that as its comparative advantage, and right now it is one of the countries that has the highest trade to GDP ratio in the world. So it has been able to capture that comparative advantage. So that is where their story starts, by understanding their own comparative advantage. So where do you think that India has comparative advantage? I would say that India's population could be its comparative advantage. So probably focusing on something like Human Development Index, यहाँ पे आप education बढ़ा दो, etc. You retain those people in the Indian economy.
Yes, and to retain them, we have to provide them with jobs as well, right?
But low-end jobs, how will you retain the top quality, right? I mean, that's the problem. So you need to focus. Again, it all boils down to focus.
Defining low-end and high-end is a little difficult here because there's no standard definition as such. It also means that you need to provide them employment, and you, of course, provide them with education, with skills, and then you use the natural resources that you have in terms of crops like cotton and jute and produce final goods, export them to the other nations. Then, of course, it solves the problem of employment, it increases your GDP, works well for the nation.
So from an economics point of view, it probably works really well. But if you think from a stock investing, finance viewpoint, actually that theory, according to me, does not work. The reason is very simple, that it's a cost-cutting industry. For example, if your goal is to compete with countries like Vietnam, Bangladesh, then why are they thriving? Because they are able to manufacture stuff at low end. Same China was also doing. Now China has moved its manufacturing to high-end manufacturing, robotics, all those items which are more GVA based. If we think, we are picking up raw material and we have to manufacture that in India, you are probably participating in a industry where the goal is to cut cost as much as possible. So these type of businesses are not would not make a nation rich. That is what my personal thought process around this is. Of course, I can be wrong.
Actually, we have to look at so many factors. We have to also look at income inequality. We have to look at unemployment. So if there are people who are not getting the basic jobs, then why wouldn't we not engage them in some employment than just making them unemployed?
Right, then the goal changes, right? I mean, the goal of this video, what we were discussing, the core of this video, what we were discussing is that how to make India rich. Here, we are talking about how to make India sustainable, right? That everyone has an employment, etc. So that is what we are thinking about there. So probably there will be areas where there will be a little bit of competition there. So of course, that needs to be decided, and it's a more thoughtful policy decision needs to be taken on that front. What we will do at this stage is that we will move to part 3. We will discuss 2 very interesting case studies with you. One is of Singapore, one is of Israel. We will talk about in our own versions why they became rich, and can India emulate that model, and what precisely. So the first case study is of Singapore, and let me first and foremost show you this picture, which shows the before and after picture of Singapore. And at one point in time, when Singapore became independent from Malaysia in 1965, so it hasn't been that long, and I'm reading this from my notes, 70% of Singapore's household lived in badly overcrowded conditions. A third of its people squatted in slums on the city's fringes. Unemployment averaged 14%. Right now it is close to 2 to 3%. Their GDP per capita was only $516, and half of the population was illiterate. So what happened in these 60 years? It's a great case study for Singapore. Of course, we can make a separate video on that. But very high level information on that front, that if you study the Singapore's history, what you will realize is that it was ruled by the Britishers, and they sent a person called as Stanford Raffles, and who was a governor in the British East India Company, and he was the one who established a trading post in Singapore. So before that, there was hardly any trading. So he established a trading post, and what ended up happening is that in 1869, the Suez Canal went operational, and that cut down the entire travel time from the Western Hemisphere to the Eastern Hemisphere, and Singapore started to get a lot of trade. So that really boosted the economy of Singapore, and they started focusing on 3 critical things. The first critical thing that Singapore started focusing post-independence was the inflow of FDI, foreign direct investments. In fact, Singapore has been so fascinated with FDIs that for a fairly long period of time, it was very easy to immigrate to Singapore. They opened up their borders to a lot of expatriates. So they wanted good people to come to their country. So they were very culturally open to bring in a more educated workforce, so to say. Second key thing that they did was export-oriented industrialization. For example, here is the balance of trade for Singapore, and even now you will see that they are a net exporter country. They run a trade surplus, not a trade deficit. So their exports are higher than imports, so that really benefits the country in terms of becoming rich. Third key point, they have a very strong government-led development model where Lee Kuan Yew transformed the entire country. Even today, you will see that their wealth fund or sovereign wealth fund makes a lot of innovation-based investments. So that is a company called as Temasek. You can learn more about it, that how it is changing the face of Singapore. So Singapore has done all this, and the underpinning to all this was a highly educated workforce. It has one of the highest literacy rates in the world. The people can speak multiple languages, and they focus a lot on education. Now, what this eventually leads them to do is that it allows them to constantly pivot. It is very easy to look at Singapore's location की strategic location हो गई खत्म बात, right? And they will keep on like exporting stuff. No, despite being net exporters, from time to time they have pivoted really well. For example, right now it's a very important Asia's financial hub, so to say. So this pivoting has really helped Singapore, and what has allowed them to do it is highly educated workforce. So that is my understanding of the Singapore model. My takeaway for India from this story is that focus on education, it can really change the outcome for our nation, especially given the fact that population is one area where India is peaking, so to say, and India has a young demography. So if we can focus on education, that can really make our nation rich, not only intellectually but also from a wealth perspective. So over to Ayushi, she will explain Israel's model and her key understanding from it.
So similar story also unfolded in Israel. Now Israel achieved its statehood in 1948, a year after India's independence. 75 years of achieving statehood, and Israel has done very well for itself. The first lesson that we can draw from Israel is that you have to learn from your own economic crisis. Now, of course, each country faces its own kind of challenges, and you have to draw your own lessons from it. But what Israel did when it underwent recession was that it cut down on its spending, it devalued its currency to encourage exports, it started inviting more immigrants in, and that formed the second pillar for its growth. That was inviting a lot of immigrants. Also, luck favored it. For example, in 1980s, when Soviet Union was undergoing a crisis, a lot of Russian Jews started coming down to Israel. The good part was that they were very well educated. The literacy rate for them stood at around 60%, while that for Israel was around 30 to 40%. So these immigrants could contribute a lot to Israel's nation building. So inviting immigrants helped them in the long term. Now the third pillar was that government actually poured in a lot of money to encourage startups, to encourage innovation in the economy. They started something called as the YOSMA program. Now, I'm not sure if I'm pronouncing it correctly, but they started something called as the YOSMA program in 1980s, which was basically a $100 million VC fund set up by the state. So in that, it encouraged a lot of startups to take up manufacturing, to do R&D, and this contributed majorly to more investors coming in from abroad. So a lot of VCs started coming in from outside, and this encouraged a common culture of innovation, which we even can see today. A lot of companies like Intel, Microsoft, Apple, they first set up their R&D units in Israel than any other country. So that culture still thrives in Israel. So these are the lessons that were implemented in Israel, and probably we can draw certain things from it for our own country.
So let us quickly summarize the entire video for all of you, and if we have to talk about the major bullet points in terms of India's journey to being ultra rich, then the first key aspect would be understanding different economic indicators and being realistic about it. So please understand the difference between GDP, GDP per capita, what is Human Development Index. All these are very important parameters. Second key major takeaway for me was the education, whether be it in case of Israel, be it in case of Singapore. I think focusing on education really helps us a lot because it allows to increase our workers' productivity, right? I mean, unless the workers are educated, it becomes like a difficult scenario. So what other points did you get out of? So if you can summarize.
And having a culture of acceptance and pivoting yourself is very, very important. That is what Singapore did, and that is what Israel did. Right. They actually invited people from outside. They invited the best brains, and they could pivot themselves according to the trends that were going on across the world.
Right, and on top of that, I think the final talking point, actionable points would be that India needs to focus on service sector, because at least we could not find many developed nations that are not focused on its service sector. The contribution of service sector needs to be fairly high to our overall GDP if the general population needs to be rich. So that needs to play out. In terms of manufacturing, Ayushi and I see slightly differently. Ayushi is saying that focus on the entire thing. I'm saying that focus on high-end.
The idea is that you should focus on your competitive advantage, and you should play on that.
Right. So I hope that those are the general points. I hope you were able to pick that from our conversation. Do let us know what next episode you would want us to do as Mango People's Economists. So we'll try to simplify that for you. But we hope that you were able to learn a lot of history, culture, economics, all combined. If you want to watch a personal video of Ayushi and me, that how have we built our life, you can go and check this video here. It will give you a lot of understanding about money and finance. Thank you so much for watching, and we will see you soon.